On board the management of Sudarshan Chemicals, Rajesh Rathi, MD at the company, joining in with us this afternoon to talk to us about the outlook of the company. Thank you so much, Mr. Rathi, for joining in with us. But what I want to start with is, what is the impact that one is actually seeing of the German-based Himach insolvency, and how is it benefiting Sudarshan Chemicals? Could you talk to us about that first?
One of the tailwinds for Sudarshan and the pigment industry in India has been, turbulence in the pigment industry, which is the financial issues with several of our competitors. This has accelerated our growth as we are probably one of the strongest players with the broadest product range in the industry, and that's what's helping really our growth and our engagement in the industry. We feel that this will further help us really become a dominant player in the coatings market globally. We are already a dominant player in the plastics market, and that will help us grow further in the coatings or the paints market.
Okay, Mr. Rathi, talk to me about what's the CAPEX plan for the company going forward, and what amount of investment will it need, and what could be the revenue contribution?
So we've just completed a CAPEX program of 750 crores. So we have enough capacity and room for us to grow with this CAPEX program. So first is how we ensure that we are able to utilize this and grow profitably in terms of our EBITDA margins and in terms of our return on capital employed. So that's our first phase, I would say, and we have enough capacity to grow for the next 2 years.
Right, and Mr. Rathi, which end of the user segments such as cosmetics and plastics are going to be driving the growth for the company going forward?
As I mentioned, we are a dominant player in the plastic market, and now I think what's going to further help us with the current situation is, of course, further grow our plastic position, but really become a dominant player also in the coatings market or the paints market.
Okay, so plastics is going to do well, and then coatings also improving your presence into. But could you update us, Mr. Rathi, what's the current market share and what's the target that you have in mind to increase it up to?
As I mentioned, we are very dominant in the India market, and we want to further in the next 3 years grow our market position by 4 to 5 percentage points.
Right, and what is the overall growth and margin outlook for FY25? If you could shine some light in terms of numbers there.
As a company policy, we don't give forward-looking numbers, but I think given the growth potential which I described, and the economies of scale, it will definitely give us a lot of leverage on our fixed costs, as we don't need to add any more fixed costs, and our margins should definitely improve going forward.
Sure, Mr. Rathi, we appreciate that, but we were just hoping to get some more numbers and details from you, given you don't speak very often to the media, so we had to try our luck. But before I wrap up, just help me understand the split between the export versus the domestic market. What is it right now? Where are you seeing the momentum? Because you did talk about the domestic segment doing quite well. What about the exports?
Currently, the split is almost 50-50, so 50% in India and 50% exports. Going forward, we will continue to grow in India, but I think our growth in the international markets would be higher.
Okay, thank you so much, Mr. Rathi, for joining in with us this afternoon on ET Now. Let's move on.
If you like this video, then like, share and subscribe to ET Now.